I want to start off with China right now. So you're saying that China is a leader in what you're calling the next gen economy. That's robots, even shipbuilding, AI. You're saying they're neck and neck with the U.S. So how does an investor play that? Is there one ETF you can focus on that, or is it more of a stock picking situation?
I think you can get hit pretty broad exposure to it. Obviously, our ETF, Grow, the China growth, Greater China Growth ETF, has exposure to a combination of this China tech giants, some of those in the chip space, advanced manufacturing. So and there are others like ours. So there's a nice way you can get a basket of 30, 40 stocks that both trade on the ADRs, 8 shares, and then the onshore Shenzhen and Shanghai stock exchanges. And so you can get kind of the full exposure without trying to pick an individual name and still do very well. We're up 20% this year on that and 45% or so since launch 2 years ago.
All right. So we're showing the top holdings of your ETF. I do have to say something, just to be fair. It's really dominated by tech. I know some of the things that, when you're looking at the U.S. market, and a lot of other people, in all fairness, look at the U.S. market, it's an over-concentration of tech. But I look at your ETF, it's a lot of tech. I mean, to me, Alibaba is a tech company, Tencent, Xiaomi, Trip.com, I would also kind of count as a tech company, and you have Meituan down there, too. So how do you address that issue of over-concentration in technology in your ETF? We're here in the U.S., a lot of people are trying to get away from that. In China, are you saying that's a better play?
Well, what's happened is that the Chinese tech scene was really beaten down and oversold over the last couple of years. The news was all negative. The news was that, there was impending, geopolitical struggles coming, that the U.S. tariff war was going to massively curb China's exports. In fact, China's exports are now projected to be 5-6% over the coming couple of years, bucking all expectations and on growth basis. So I think anything that taps into the Chinese consumer story, again, the narrative was that China was going to be dragged down by its own kind of Lehman type moment. That has finally started to ebb after we've been saying it would subside for years now. And so I think people now kind of value both the China domestic onshore consumer and their ability to export technology and goods, and then have kind of those key components you mentioned for the tech value chain, like rare earth magnets, chips, and a lot of the kind of hardware like mobile phones, EVs, and robotics.
All right. One of the things you're mentioning are exports. And so a lot of headlines about China having a trade surplus of $1 trillion despite the exports to the U.S. declining. Is there a way for investors to play that trend? The idea that China's clearly diversified its exports to other parts of Asia, to Europe and other things. Is there a way to capitalize on a trend that seems like it's going to continue into the new year?
Well, again, all those Chinese companies are major exporters. And, I think China today is somewhere around the number one trade partner to over 80 countries around the world. And so by actually buying into Chinese companies, you're getting exposure to a lot of those next kind of generation emerging market consumer markets in South Asia, Southeast Asia, Africa, the Middle East. And so, buying someone like Xiaomi, who are, kind of an electronics maker, are selling into all those markets, or buying someone like Hikvision, or someone like all of these have huge, robust markets across those emerging markets. And so there's very much a trend to that export narrative driving a lot of the growth within those Chinese tech manufacturing names.
Yeah, fair point. If you've ever been to Africa or the Middle East, you're going to see a lot of Chinese technology there in particular. You're saying that the U.S. and China, they're neck and neck when it comes to the AI race. You've heard different opinions here on the show. Other people have said the U.S. has a lead, but it's narrow. But either way you look at it, it's a pretty close race. What are the next generation companies we should be looking at in the Chinese market to play this idea of a kind of a neck and neck race when it comes to AI between the U.S. and China? I mean, everybody knows the Alibabas and some of those names. Are there some other, second level names that we should be looking at?
Yeah, so I mean, there are a whole group of companies now coming out into the market that are chip manufacturers, robotics companies, and kind of core technology producers that are just now hitting the Hong Kong Stock Exchange. So, for instance, we have a company in our portfolio that's about to go public from the private side called BREN. Some of the other Chinese chip manufacturers are up 500% since going public just over the last couple of days. We have Black Sesame in our portfolio, another one that's been stellar on the Hong Kong Stock Exchange. And so there's a whole new generation of much kind of, let's say, underexposed, underpublicized Chinese chip and core manufacturing companies that are doing incredible business and that are, again, going to be exposed through those types of ETFs we mentioned earlier that you can get access to through these baskets. And I think those will see you kind of hedge your kind of political and economic risk between the two markets.